Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, so today we're going to talk about how rentals affect the housing market, and we're specifically going to talk about some cities that have had dramatic rent increases, why that happened, and what that looks like for housing in those markets and in other markets. Because obviously we've had rents go up and home prices have gone up. But in some markets, they've gone up more than others.
Right. So, we've got markets where they're making a comeback, and those markets have rent that's basically keeping up with inflation. And then we have markets where people have moved to or fled to, depending on, how your point of view.
Interesting choice of words.
Yes. But these are markets where people have relocated in mass, and those are markets that have done really well as far as rent appreciation. Maybe not so well from the perspective of people moving in and trying to rent, or people who are already renting and seeing those rent increases. So we've got markets like Miami.
Okay, so we'll put up the slide for them.
So we've got markets like Miami that went up like 40%. And we've got markets like Phoenix and Vegas that have seen substantial rent increases. And that's great for those markets. But probably keep in mind that those markets, while they've had these dramatic rent increases, quite possibly they maybe had lower rents to begin with. So there was room for that rent increase. Plus they had an influx of people. So there are a couple things at play in there. Not just people moving in, but there was room in that market for rent increases to start with. And then you have market like New York, like I said, that people are just seeing normal inflation type rent increases. But those, remember, are markets that people had kind of an exodus during the pandemic. So they've now come back and rents are coming back too.
So let's talk about that. This is year over year. So New York City, 8.4%, but it actually was down between 2020 and 2021. It was negative because you could go online and search New York City and find apartments that you could rent for $3,000. Now they're asking $2,500, which is pretty substantial decline. And maybe they did rent for $2,500, and maybe they're back higher. They may not be back to where they were in 2020, but they're still, so year over year they're up. Right? Let's go through these really high ones. Miami, 40%. Those people got there for two reasons. They either fled New York, right? Because they said, I've had it with New York City. I'm going to go to Miami because it's nice weather. I can commute back and forth, whatever. And then you had tech companies.
Yeah.
So Miami got people from two different states.
Well, probably from more than two different states. But yeah, so they did get people from New York, they did get people from California, and they did get people from other parts of the country as well. So they've got this nice mix in Miami. The other interesting thing about Miami is that they got a lot of younger people. So people maybe under 40 or thereabouts. And that's an interesting mix because they're all coming in and they're renting. And so I think you're going to see this continued rise in prices in Miami, particularly in the resale market and in real estate in general, because as these people are put down roots or go beyond renting to purchasing, they will continue to keep that Miami real estate market very active.
Yeah, they can't just build more real estate for that fast for the people that have moved there. And a lot of these people are probably not leaving. They're probably not going to just go back to California or go back to New York City. Some certainly might, but we anecdotally have talked to people who did leave New York City who have said, I really miss it, but they're not going back.
Right.
Like, I miss my friends and I miss stuff, but this is why we moved and this is why we're staying there.
Right. So, Florida has been a very good second home for people for a very long time. And it's now making itself a primary residence for a lot of people, and they're enjoying living in Florida.
Phoenix, San Diego, and Vegas all effectively got the people who bailed from the Bay Area and Los Angeles County. Mostly, I think Los Angeles County went to San Diego. And then the Bay Area people went to Phoenix and Vegas and drove up rent. So when you look at that rent increase, you can see 7-8% of that is inflationary, because that's what the Fed reported as inflation for real estate. They reported like 0.6% per month, which is 7.2% over the year. And then the rest of that amount that you see to the right is all the excess people. So tell me about this one. When people talk about the real estate market, it's much different than like the stock market, because if you own shares of Netflix, or Tesla, it doesn't matter where you are, those things all move up and down. Tesla's worth what Tesla's worth, right? But if you own a house in Vegas, or a house in Phoenix, or a house in Miami, or a house in Duluth, or a house in Detroit, or a house in the Bay Area, it's now almost a completely different market.
Well, they are completely different markets. And even within the same city, if you own a house in Las Vegas, it makes a huge difference which part of Las Vegas you're talking about. Do you own a house in Summerlin? And even if it is in Summerlin, which part? North Summerlin is different than West Summerlin. It's different than South Summerlin. Real estate is very hyper local, and people have preferences, and those price points are completely different depending on where you are. The desirability is different for a whole host of reasons. The market value for the same exact cookie cutter house, the same track house built by the same builder at the same time, just a few miles away, is going to be a completely different price.
Yeah, because certain areas are deemed more desirable. Like, we're kind of too far out there. So you get a little closer to a nicer area, and the same house is $100,000 more, because it's the same size lot. It's the exact same house. If you were in the house, you wouldn't notice the difference until you walked out the door and got in your car to drive somewhere. And you go, the store's right around the corner. I'm near a casino, or I'm near something where there's things to park, bowling alley, whatever, restaurants. And then you go to the other house and you go, wow, it's like 5 miles to the nearest park. And because I'm kind of way up here in this weird area where they haven't built out anything yet.
Right. So that's why, we always say that real estate is hyper-local, because it is. Whatever is important to us has to be really close to us. And it's very interesting to me because, if I am very accustomed to driving around. However, I like living close to everything, even though I spend my days driving. So it's important to me that the things that are important to me be within a 10-minute drive. Longer than that, I'm not that particularly interested. So, and I think a lot of people are that way, no matter where you are. I spoke with somebody not that long ago, and she was saying that everything is really close until you live here, and then if you have to drive more than 10 minutes, you complain. And I was thinking, well, it's the same thing for us. It doesn't matter where you are or where you come from. If you came from California and it took you an hour to get to work, and now you live in Las Vegas and it takes you 20 minutes to get to work, it feels like it's taking you forever to get to work, even though you're accustomed to previously driving an hour, now it's 20 minutes. So 10 minutes is kind of, I think, most people's happy spot for getting to things that are important to them.
We thought the rent numbers were important to share. And now these are only select markets. This was not like the top 10. So there are other markets where rents are up, because you could say, hey, wait a minute, I live in Tucson and rents are up 20% or whatever. And that's maybe true. These were just, this data was from Bloomberg. It was just some data that they grabbed just to show the difference in these markets. Something else that's interesting to think about is, it's almost like the home sale market has been sort of going up with the rental market, but that doesn't mean if you get more inventory of homes for sale that rents may potentially go down, because prices are more based on the availability of rentals. Meaning, if you're in Chicago where they have like 6,000 high rises for rent that you could rent, like high rise or something. It was a ton. And you could just literally, they're on the market for months and months. You could just go pick the one you want. You could pick 3 or 4 and maybe negotiate the price. Whereas in a hot market, you can't do that, right? You call, there's 5 applications, it's listed for 2,000, but people are saying, well, there's someone else that they're going to pay 2,100. So we're just going to give it to them. You could have more homes on the market, but doesn't mean rents are going to drop, right?
Right. So real estate is a long game, okay? That's really the bottom line. Real estate is about building wealth. Real estate is a long game. They don't really care what their properties are worth today. Those that bought properties last year, yes, that they're feeling pretty good, but even if the market had gone the other way, they would still be okay because they're purchasing real estate for the long run. They're purchasing real estate to hold on to for 20 years, and it's about the long game. I think that's the thing that people who are hyping the volatility of the real estate market and that sort of thing are missing that really important point, that real estate is not a stock that you day trade. Real estate is not something that you get in and out of because there are transactional costs in and out of it. And because real estate over the long run is a good way to build wealth. Look, we were discussing a property that your parents owned when you were a kid in San Diego, that your parents paid $24,000 for this house when you were a kid.
1970.
And it's now worth almost $1 million.
Yep.
Okay.
3-bedroom, 1,500 square foot, 1,600 square foot house.
Right. So over 50 years, it appreciated from $24,000 to $1 million. That's what real estate is. It is about appreciation over the long term. It's not a short-sighted game. And that's what bothers me, I think, about a lot of these people, whether they're in the media or on YouTube, wherever they are, and they're just completely down on real estate, and they're forever touting that it's going to explode, it's going to crash, whatever words they like to use. But I think that they're not looking at what real estate is, which is a long-term investment. It is an investment that provides stability. It's an investment that you can use personally because we all live in a house, right? So it is something for the long run. It is the best way to build wealth. I mean, I think we can all agree that real estate is a great way to build wealth. And I think that's something that people who look at it as a short-sighted investment forget that part.
For those of you who made it to the end of the video, thank you very much. Please subscribe, hit the notification bell, leave us a comment, and go back and watch all our old videos. I got an email from YouTube.
From you, okay.
This past week.
Okay.
That we had uploaded our 800th video. So I was guessing it was 800, but it's actually 800. We've broken, this is like 801 or 802 now.
Okay.
So we've actually exceeded 800 videos. We could get to 1,000 by the end of the year, but it'll probably be early next year. We'll do a couple hundred more videos between now and then. And it'll take to sometime next year because we're not going to make 7 videos a week anymore. If you're interested in buying a house in Las Vegas, one of our buyer agents can help you out on our buyer team. If you have a house you need to sell in Vegas, just reach out to us, either one of us, and that's literally what we do for a living. Is we help people sell their house. We help people with the listing and sale part of the house. Went on a listing appointment today, so. And
then we also have a great network of referral agents. So if you have a house that you want to sell or you want to buy anywhere in the country, please let us know. We'll be more than happy to refer you to a great agent. And if you have any questions or any feedback, please leave us comments. Please like the video, share the video, hit the notification bell, and we'll see you on the next video. Bye.
Bye.